How's it going, everybody? JT here on behalf of the EV Mavericks. We're waiting on Jordan from Quotient to arrive, and apparently there's been a little bit of communication issues. We're working with him on Telegram, trying to get him on board for the show today. Quotient is the company that we were going to talk about, but if they can't get here, that's okay too, because we got plenty of dudes to go over for this week. So welcome everybody in. My name is JT on behalf of the EV Mavericks DAO and the R Ethereum Daily General Discussion episode. I think this is like 156, something like that. It's a lot. So welcome in. If you're new here, make sure you head to dailydoots.com and subscribe. And wherever you get your podcasts, this will show up. Of course, we're also streaming on Twitch. I believe maybe LinkedIn on my channel and then on Twitch and a couple of channels on X. And but the biggest part of this conversation actually takes place right on the EV Mavericks Discord. You can find all of this at dailydoots.com. So we're going to go straight into the Doots, and we'll wait and see if Jordan is able to get the elves to slap the squirrels around, to run the cage, to connect to the satellites and get him connected with us wherever he is at. So, yeah, this is pretty crazy. We let's just talk a little bit about price for a second. We don't get to do that very often anymore. This is pretty incredible. A little 20% rise to the upside or whatever it's been. And looks like ETH was leading the charge. And then it looks like Bitcoin is catching up a bit. A lot of, what do they call that, a whipsaw on the ratio. But it sure is sweet to see that ratio bounce above 0.03 or whatever, 0.003. I don't even know what the ratio is. We're going to get into that. But anyway, I feel nothing. I really don't feel anything. It's not relief. It's not even a relief at all. It's like I'll feel something maybe above 3,000. Maybe I'm just... I don't know, bitter? Is that the word? I don't know if I'm bitter. Let's see. I am hopeful. I did read briefly. It looks like even today, I want to go. I know this is way off topic, but we got some time to burn here. We might as well give it a shot. So, this thing right here that I saw, let me go to, I think it was on the EV Mavericks profile. This deal with the, oh, look, we're live. Great. It was this tweet that came out that was regarding the CFTC. Let me see if I can find it. CFTC, let's just type in crypto. And so this follows on the heels of something. Yeah, here it is. Eleanor Terrett. This is the exact tweet. This afternoon, I think this was maybe yesterday. We'll kick off the inaugural meeting, okay, of the Innovation Advisory Committee to discuss crypto, AI, and prediction markets, which is such a fitting, topic for today with Quotient, from what limited understanding I have. But look, this list of people, I mean, starting all the way at the top, Hayden Adams, Brian Armstrong, and I think a lot of these people, if not most of them, showed up in person. I did hear that Hayden from Uniswap just kind of casually called in, and that was good enough for him. But what a deal that was. I didn't get a chance to watch this, but there you go. I mean, like Robinhood, Gemini, Falcon X. I mean, DraftKings, Franklin Templeton, Kalshi, Grayscale. It's like for an inaugural. This is the inaugural meeting. I guess what I'm trying to say is, for all the bitching and complaining we have about price, it's really instantly gratifying just in 10 years' time, specifically with Ethereum and whatever length of time Bitcoin is around. These are the major institutions that are really having to pay attention to what is going on because they see the cracks in the armor of the fiat system. And for better or for worse, I know we got the grifter in chief in the White House, but to have the SEC come out with some of their guidelines and now the CFTC, and they're really doing the communication with the the thought leaders in the industry. It's not nothing, and it is interesting. I don't know if any of you noticed this. You remember like when the Clarity Act got punted until I think September, and then they're saying, well, it may not get signed at all or whatever. And then the price really just kind of sat there. I mean, if you wanted a bottom, that's about as good as it gets because that's typically the type of news they would send price action, at least running down the cliff, right? But we were already in the bottom of the Grand Canyon, you know, Grand Canyon of price action for basically, years at this point. And these the flip now to see that the SEC and the CFTC are like, we're continuing the conversation. Just because the Senate's not ready to deal with the Clarity Act for a variety of reasons, including war, which is probably paramount, hopefully, on all of those people's minds up there. It's like, what the actual heck is going on with that? At least the CFTC and the SEC are continuing to work, I think, in the right direction. I don't know. I'm sure there's a bunch of different opinions, and if you have one, be happy to hear it. We've actually, it's promising. I'm not too hopeful about the Clarity Act because there's so much division. I think it's just the midterms are going to be all anybody's going to be worried about for this cycle, and that's just politics doing political stuff. So, but I think that something is rippling in the water with the price jumping the way it did, and the institutions are clearly getting a signal. This I just don't. I was talking to somebody on the phone that I'm friends with about it, and they thought, well, the price action that was the good news that kind of tripped the trigger, and that got some institutions to buy. But he was under the impression that, yeah, Bob and Alice maybe got in on it too. It's kind of like the lottery. There's people that don't buy lottery tickets until there's price action, and the $1 billion lotto comes up. That's when they buy. There's some truth to that. But I made a bet with him. I said, give it 5 days. In every previous cycle, every single one of them where the price went up really high or down really quickly. I mean, when it goes up fast, it goes down fast. Big, sharp moves that make headlines. I would invariably get contacted by some of the same people. Are you still doing that Bitcoin thing or whatever? Just picking my brain about it and see what I was thinking about it. And I have a feeling this might be the first cycle. And I told him this. I said, if I don't hear from anybody in 7 days, I won't be surprised. I really won't. I feel like Bob and Alice checked out. There was too much scamming going on. Too many people got wrecked. They feel like maybe all the easy money had been made. And they were burnt. They were burnt either by weak hands or just a complete lack of interest in anything actually decentralized or somewhat sovereign. I don't know if sovereign's the right word, but to allude to like, hey, this new system might be a thing we want to check into. They didn't have that native thirst for, I hate to use crypto anarchy, but there is a little bit of this getting decentralized stuff that is important to some people. And I just feel like that's not what it's been about for the last cycle. And now I would be very surprised if anybody gets a hold of me. I think DC Investor, in fact, let me see if I can find what he wrote, because he wrote something that is here it is. Spot chill. Where did it go? He tweets so often now, but basically, oh yeah, here it is. Here's the tweet. Shout out to DC Investor, friend of the show. He says this, hey, if I just saw crypto went up a lot, should I buy now? This is like somebody texting him, right? This is the thing. And me saying, why weren't you buying it for the past 6 months when I told you to? And the texter says, because the price was low and I thought it'd keep going lower. Many such cases. It's easy to LARP and act like you'll buy the bottom, but most people simply don't have the balls to buy the bottom when the time comes. This is your second best shot, I guess. And then, yeah, this is when I respond, because he was like, this is what my friend was saying, on the phone. And it rhymes so much with this. But I responded to DC. I made a bet with a friend yesterday. This might be the first cycle where I don't receive a single phone call or a text asking me what's going on. I think Bob and Alice gave up. This is all just big institutional shit right now. All right. So that's just my opinion on it. I'm happy to be wrong. If you have any ideas, leave a comment or join the Discord or do whatever. If you type something out, I believe in Discord in the Doots podcast chat, the chat should show up on the screen here. If I got it, maybe I didn't add it on this one. Let me add it on this one. I think I got the restream captures somewhere in here. Let me see if I can do it on the fly. I don't know if it's going to let me do it real quick. Let's see. Yep, here it is. Okay, add one exists. There it is. All right. So if you yap at me here, apparently it'll work here. Good. So let's go ahead, Squirrel Brain, and get back on to our Dudes podcast lineup for this week. The Dudes is all about celebrating the best of the best from the week that was on the R Ethereum Daily General Discussion. And we got a big shout out to Tricky Troll for making each one of these Dudes happen every single day on the daily thread, and the A word for this beloved weekly list. You can read them all at dailydoots.com, designed and produced by our very own Hanny Abu. All right, here we go. Morning roundup. Day trader by H chimes in Ethereum. Hanny Abu showing up with the price of $23.98 and also the ratio at 0.030. But I saw it get above 0.031. I think it was yesterday, 2 days ago. Weekly haiku courtesy of JS Tiers. Dilution catch you. A better store of value. Keep printing, but few. How does he do it, JS Tiers? And user SM3GH34D delivers some post-quantum hopium for Justin Drake. He is a duder number 20. Did I read that right? A 21. Ooh, I got to refresh. They're higher than that now. There it is. Duder 23. He got 2 dudes last week. He's moving on up. All right. Post-quantum hopium for Justin Drake. From Justin Drake. Here's some high-grade hopium for you. This is according to Justin Drake. All right. Goodbye, Poseidon. An epic 8-year, 8-figure rabbit hole in post-quantum cryptography reaches its dream conclusion. The Ethereum Foundation is abandoning Poseidon for Layer 1, pivoting to SHA or Blake. This milestone unlocks ultimate security for lean Ethereum and foreshadows a golden era of hash-based cryptography. Since 2018, the Ethereum Foundation has invested in magic cryptographic bricks, so-called snark-friendly hashes. In 2019, Poseidon was born. It held strong and became the dominant snark-friendliest hash, securing billions via ZK rollups and ZK VMs. In a stunning reversal. Stunning, I tell you. Breakthrough snark designs show that snark-friendly hashes aren't necessary after all. Off-the-shelf traditional hash functions like SHA-2 and Blake-2 can now match Poseidon in a snark. In hindsight, the key was not snark-friendly hashes, but hash-friendly snarks. And it goes on from there, finally saying, today, I can confidently claim that hash-based cryptography has won out for blockchain post-quantum signatures. Snark succinctness compresses arbitrarily many signatures into one small proof per block. Snark flexibility yields K of N threshold signatures, complex multisigs, and more. Ultimate security, uncompromising performance, full programmability. Believe in something. Believe in hashes. And there you have it from Drake himself. Justin, you're the man. All right, good stuff. I forgot to go over our leaderboard for this week. Let's do that real quick. Coming in at number 10, ethical trade, the A word at 128. Crypto out currency at 145. Hanny Abu 146. JS Tears at 170. Tricky Troll at 183. Benito 2030 at 186. Super Fizz at 250. Logri the Bard at 265. And Harog sits atop of the Doots, as usual, at 371. All right, here we go. Moving on down the list here. User Jamie Howe explains who ETH coordinate is for those who missed the change. I'm just going to say Jamie because it looks like it should be read that way. And this person is let's see, nope, that's a rhythm of ETH. Let me see if Jamie Howe's got. Yeah, I don't see the thing. I'm a little bit out of sync. What is ETH coordinate? What is this ETH coordinate thing popping up where ETH staker used to be? Oh, this is not Jamie Howe. This is Rhythm of ETH writing this. Rhythm of ETH is a Deuter 114. Damn, that's a big number right there. Great job. All right, who is led by pro issuance EIP people? Who is bankrolling them? All right. So what is this ETH coordinate thing popping up where ETH staker used to be? Okay, it's the same organization but a new name. Their site says ETH staker was too limiting for the scope they were taking on, and that it's the same team plus some new members. The funding question they answer themselves in the frequently asked questions, donations, with the main donors listed as the Ethereum Foundation, Optimism's RPGF, Octant, Arbitrum DAO, Rocket Pool, Gitcoin, and individuals. And that's right on their page. So there you go. Thanks for that summary. All right, user Greg Foley thinks that predictable issuance is more important than perfect issuance. Let's see, Greg Foley for this week is a Deuter number 12. Predictable issuance. Here we go. Predictable and trustworthy. Micah Zoltu says it pretty well. I am extremely skeptical of claims that the current issuance curve will be so bad that it will have a significant impact on the long-term health. As an existence proof, USD still works despite an insane issuance policy. Other things matter much, much more than these tweaks. I'll add that gold has had a stable supply growth of 1.5 to 2% per year over the long term. The other thing many people don't seem to get in this debate is not about how much is staked, but it's about how decentralized and uncapturable the staking is. I know that's a hard problem to solve, but targeting the amount of stake won't solve the potential problem. Hey, ladies and gentlemen, I see that iPhone has entered the chat. Jordan, can you hear me? I see you.
Yeah.
Yeah, I can hear you. Awesome. Welcome to the show, man.
Thanks. Thanks for having me. My
Yeah.
internet's a little.
No.
Is there an echo?
No. Can you hear an echo?
I hear myself, but
Do you have is it okay? You don't hear an echo from me, but you hear an echo from yourself. Are you watching the stream on your phone somehow on top of being on the Zoom call?
no, I'm just on the Zoom call.
Just on the Zoom call? And are you using speakers at all?
I just switched headphones.
Okay, cool. Let me know if you resolve that. We can let you get that figured out because that's going to be hard to deal with. You know how hard it is to talk when you hear an echo. That's actually, I remember a few years ago that was like an internet meme. Not a meme. It was actually like a challenge trying to talk through a microphone when you hear yourself on a like half a second delay. It's pretty difficult.
I'm good when you're ready.
Okay, excellent. I was gonna try to do. I'll just because I wanted to talk to you a little bit before the call, but we'll do it on the call. How about that? Because we're live on 5 different channels, but this is what we do. We're gonna make the sausage in real time. I went to the Quotient. Let me switch screens here. I don't know if you can see this. I went to the Quotient app and I tried to log in, And then it said that it was trying to create a wallet, and I never got past that step because I wanted to try to do some kind of a live demo. I even went and bought some Quotient and put some ETH on the Robinhood chain. I don't know if I needed to do all that ahead of time, but I was just playing around. What can you tell me about that? Is there anything I should be doing different?
Yeah, so to access the app, you need 10 million quotient in a wallet
You
that you
need it.
can
Okay.
sign.
Okay. Well,
Yeah.
let's see. Let me. I got my Rabby here. I got my trusty Lattice one by Grid Plus, and let's see. I could go to. I need to go. Kind of a boomer here. Trying to find like my. Ooh, this says not connected on Ethereum, but the app doesn't need it. I guess. Okay. Trying to figure out how I can see what's in my wallet. Here we go. So the custom network. Let me see if I can. Let's see if I got. There it is, Quotient, and that says 4,934,000. So I need to get a bit more.
Yeah, that's right. That's our main revenue right now. People buying the token to
That's cool.
access the application.
I wonder if I can just swap inside of here if it'll work or not. And can I swap right inside of Rabby?
You should be able to.
Let's try it. Yeah, those are all imposters. Let me go to. Let me find your contract address. Anyway, while I'm screwing around, you know what? I think I just did it on Uniswap. I'll go there. Jordan, first of all, thanks again for taking time out of your busy schedule to join us. Can you give us the lay of the land as to what Quotient is up to right now, and what is it? And can you do just a 50,000-foot overview of what we're doing with Quotient?
Yeah, sure. So Quotient forecasts the world's most important markets. So you can think of geopolitics, global elections, commodities like gold, silver, and oil. And we are doing this with a proprietary AI forecasting model that we've been building for the last 6 or 7 months. And we've run this across thousands of markets, run thousands of forecasts. And over the last 6 months, over the last 60 days, the forecasts have been 8% more accurate than Polymarket. So
Wow.
this creates a big opportunity where kind of instead of reacting to headlines when you trade and acting in the past, you can act based off of our forecasts and like live in the future. So when a headline hits, you're already positioned to benefit. So as a recent example, like 5 days ago, I asked Q, the forecasting agent, which commodity are you most bullish going on to the end of the month? And Q said gold. And then three days later, Bezant kind of announced his interventions in the bond market, which led a rally over the last couple of days.
Huh. And
But
can you
because
rewind and talk about Q? Can you tell the audience what I heard you mention Q? I know a little bit about it, but maybe start there. What is Q?
yeah, so it's an AI forecasting framework. So every day we bring in articles from like 2,000 global sources. We bring in posts by domain experts on the topics we cover from X, and then the forecasting pipeline will go to a market, categorize it on the relevant research, and then generate a forecast, which is like a probability that the event will happen. So that could be Bob will win the election. It could be silver will be above whatever I like 660. I forget what silver costs. Or that's like copper. Or like gold be above like 4560, right, by such and such date. And then we get the probability, we get the reasoning, the scenarios, the citations, and users can access that. And over time, it's getting better because we're training the model based off of the markets that have resolved.
So if Q is going out and finding all this information and giving users, I'm wondering about the game theory. At what point does the narrative flip that you can only have so many winners at a time before the opposite, short needs to happen to counter like if the quotient catches fire and everybody's getting the same answer to all buy gold, somebody's going to counter trade that. Will Q help those people figure out the counter trade to its original advice? You know what I mean?
Yeah, great question. So when you get into the app, the homepage has what we call signals, and this is where the spread between Q and the market is significant, and the market has a meaningful amount of liquidity. So in terms of counter trading, for markets like gold and silver that have a lot of liquidity, like hundreds of millions in open interest on hyperliquid, like I don't think we're going to have people like clipping millions of dollars per trade. That said, over time as the edge shrinks, like if more people bet in that direction, the edge shrinks, and we would like stop recommending that on our homepage as a signal.
Ah,
But the other part is like as you're seeing with buying the token, it's going to become kind of expensive to access the app. Like when we first launched, 10 million was like $10,
mm,
right, a few weeks ago, and now it's closer to 70 or 80.
mm.
So the idea is that as the platform becomes proved out and more people are using it, it becomes more expensive to access. And it's kind of like a self-correcting process in terms of protecting the alpha.
You guys are going to be like a Bloomberg terminal for markets.
Yeah, I hope so.
That's cool. I got 70, $80 worth of quotient tokens here. Um, I'm just for anybody that's out there. First of all, like, just this is obviously we're playing on a live stream with this app. You have to do your own due diligence, and I always like to. I'm just philosophically, I like it when we try to do things in real time and show people how to use stuff with the blockchain. And just from my own philosophical soapbox, when people are looking for the next killer, they're just like, why aren't there any killer apps? And I flip the script and I'm like, why aren't you using apps? So I urge people to go explore the spaces that are out there, and Quotient is one amongst many great apps that are out there. But I think what you guys have done just in the brief research is you've been able to tie together this AI with the token kind of dichotomy. And I know that I feel like I'm actually in the future finally, because this was being discussed, a few years ago. Like this is kind of the killer use case for AI and is blockchain because of all the automation and stuff that can be done. Anyway, that I'm off my soapbox now. I think I got all these tokens figured out. If so, I just tell me I haven't done anything here. Do I do deposit first?
Um, so if you go to signal.quotient.social,
Si-
um, yeah,
Here we go.
and then on the top right, you'll see like get access button.
Get access,
Hmm.
connect wallet.
Hmm.
Okay, we're doing it live. Dun, 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 dun. Ignore all. Here we go. Here we go, Rabbi. And then I'll do a create account.
Yeah, and then you can just use whichever
Yep,
sign-in method you prefer.
got it. How cool. I love it. Grid Plus Lattice One showed the call data and everything for the. I don't know if you've got one of those, but I think in your industry you should. It's pretty handy. All right, handle and picture, replace your wallet address on the leaderboard. All right, so I can I can upload a picture here. Let's see, I should have. There's a nice ugly mug here. Good, that's done. And the handle will be JT Nickel, and that's done. And then I will just leave my wallet as the sign-in method for now. Okay,
Mm-hmm.
good to go. Now, let's see. Oh, that's night or day. All right, where do we go next year? Back over to the other site?
Go to the home, like the little home icon on the left sidebar.
Left sidebar. Do, 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 do. Okay. On the left sidebar, I'm missing that. I don't see it.
Um, try.
I got a pop-up blocker on. There we go. The pop-up blocker for the just so you know, that was Brave Browser's pop-up blocker that was hiding that sidebar. All right. We're on the home page here. I know doesn't make for great audio on a podcast, but that's why people should be watching first and listening later. This is good. Okay. So portfolio is okay, good. That's
And you should see like a bunch of signals on the page.
Oh, this is just a portfolio side. Let me go back over to here. Okay. Oh man, it's commodities, crypto, geopolitics, global elections, tech, and business. I mean, this is like everything that's out there, huh? Let's see. So I'll just pick on something here. Let's do this. United United Russia likely to post largest seat gain. Okay. And then
Yeah, it's a fun market.
yeah, and I don't know anything about it, but there it is where it shows that if you have to go to the external site to trade on Polymarket, or can you do it all within this app?
For now, you have to go to the external site
Okay.
because if we allow trading on the site,
Ah,
we'd have to geo-block.
gotcha. Okay. Very good. Well, I won't do that. But anyway, so walk me through this. If I was to go and trade this, or what is this? Buy yes here. Okay. So
Yeah,
this is the a. Okay, I'll shut up. Go ahead, Jordan. Thank you.
so the idea is like you get to the page, you can see how our forecast has evolved over time versus the market and how much of a gap there is. And if you scroll down, you can read through all of his reasoning about why it came to the probability it came to. So it says like a summary, like kind of the key factors driving its forecast, the scenario that it feels like is the most likely. You can see all the sources cited in the forecast, so on and so forth.
This is so cool. So basically, just correct me if I'm wrong. So Quotient is able to extrapolate basically like one pagers from all of the markets. It's like an aggregate of it's like reading a newspaper about what's going on across all these different markets. Is that a decent summary? It's not just Polymarket, right?
Yeah, 100%. Like it looks at the poly market odds for like that market, for instance,
Sure.
but then it looks at like Russian newspapers and subject matter experts on Russia, on X and Reuters, and then it takes all that information,
Oh,
synthesizes it into a probability,
so
and then
evidence.
yeah,
It does give you all the external links for all these different evidence. So all these different newspapers, like you said, you can go read for yourself. Okay,
yeah,
that's
that's the
cool.
idea because we're building it for people who actually want to like learn about the world, and some people just want like the what's your take? I'm going to go buy it. And we
Wow.
found that the people who like do the reading and kind of think for themselves, like have higher P&L, right? And I care about media and journalism, and I want people to be informed about the world.
I love it.
So
That's important. It's kind of like some people buy the newspaper just to see the stock page. But then other people buy the newspaper to read the news. Like, so, yeah, like you said, like Wall Street Journal, right? But Wall Street Journal would have like the stock page too. I'm just thinking like just
yeah, yeah,
just as a kind of a metaphor. And then some people like to do both. But if you have an
yeah,
agent that could kind of give you a one pager and do a little bit of aggregate, you can always go and read the primary source material if you think the agent might be like hallucinating a little bit, that kind of shit.
yeah. And like sometimes Q is wrong or it's miscalibrated. So like for me, I'm always skeptical. But yeah, like the way that I view it is that a lot of it is kind of skim. And then if I actually want to trade on a market, I'll be like, okay, like let me like click around a little bit, make sure I understand it. So if I do trade it, I have conviction because these markets are super volatile. And if I don't have conviction, it's going to go down 15%. I'm going to sell it. I'm going to lose money. And then it's going to like resolve in my favor. So it's, yeah.
Okay. And so what is the function of the quotient token within the app?
Yeah. So there's two things that it does. First is tiers of access. So right now we have one tier of access, which is holding 10 million. As we add more features into the app, we're going to add more tiers that require more tokens. And that is just a way to kind of control access.
Gotcha.
And I view it as better than like subscriptions because you like pay like a bunch of money for a subscription, then you're kind of stuck with it, you have to cancel it. And with us, it's like you can just sell the token, right? And I, so there's that element, and then the other element is for the API, where you can just buy API credits, but if you hold a certain amount of the token, then you get a discount. So that's another area where it's currently integrated.
And what does the API get you?
Basically gets you access to all of the data that you can see on the site.
Okay.
So you can like query like what are the signals for today? What's the intelligence on this market? So on and so forth.
And so have you has anybody trained I don't know how to ask this question. Okay, so I guess could the API, like if somebody wanted to set it up and they want to use the quotient engine for their trading bot or whatever that could
Yeah.
handle going to Polymarket on their behalf. Is that kind of where
Yeah.
you're seeing that application go? Am I reading that correct?
Yeah. There's some like issues in terms of offering that ourselves directly.
Mm-hmm.
But yeah, people are integrating the data into their own bots. And then there's kind of like trading products that are integrating the data to show to their users.
And how long has Quotient been live and running, up and running in this form?
In this form, for about 3 weeks.
Oh, wow. We got a new baby
Yeah.
in town, huh? I like that. Good for you. I'm not sure how Ben Broad found you. He's one of our producers for the podcast, but
He's a Farcaster guy. We're both on Farcaster.
okay, that makes sense. And how many people are on your team?
3,
There you go.
including me.
Don't you love it? That's good, man.
Yeah.
This is really exciting stuff. And so okay, so as the levels of subscription go up, what are some features that you guys would like to get unlocked for the next level of things?
Yeah, great question. So first, alerts and notifications. Like some people want and get an alert on Telegram or whatever when a new signal is published or when something happens with a market that's in their portfolio. Um, the second thing is access to Q, which is the name of the agent within the app. So through a chat interface. So you could be like, hey, like, I have this question, go figure this out, like create this automation, and eventually kind of like trade on your behalf. Um, so and then as we grow and we're looking at new like market sectors like commodities, for instance, we might like have a base level subscription that's like you just get the prediction markets, and then the other subscription is like you get the price outlooks for the perpetual futures, commodities, etc. So yeah, right now, like the biggest focus is just like convincing people that it's valuable and
Yeah.
worth using,
Well,
and then like iterating on their feedback. So,
yeah.
because if it's people don't find it useful, like none of the rest really matters. Um,
Yeah. Well, there's something to be said about pro- you're producing something useful that if it has a proven, let's say a proven track record over time that Q is able to earn an extra, even a percent, right? Compared to the subscription cost of a few quotient tokens, that's pretty much nothing. That's like the the barrier to entry is pretty much nothing to get that extra 1% on average over the course of time. But it sounds like it's much better than that. But what I'm saying is if you have an API and you have a bunch of agents out there and all they're trying to do is get that 1% every time they go, even if they have other tools, they're going to do it. So,
yeah, and that's the thing. That's why we're like, let's get people using it. Let's get people talking about it. And then to the extent that we cover assets that like a lot of people trade,
like
like
high
gold, oil,
volume,
Bitcoin, ETH,
yeah, like the high
like
volume people that are out there, they'll they'll go crazy for 1%. If they're
yeah. So I'm like, we're like, if we there's like if 100,000 traders paid half a cent a day to get like what's the outlook for oil today, and like it's one factor out of 10 that people look at. That's a lot of money, actually.
yeah,
Right? So,
that's
so
that
yeah,
edge. I mean, that's the edge. That's why I mean it's just you just see it in the high frequency trading world. I have a guy. I wish I could get him on sometime. His name is skipping my mind, but I met him when I was at a I like to flex that this Kansas barbecue trombone playing guy went to Princeton for a conference twice, and both times this gentleman was there, and he was a high frequency like forex trader and all that kind of stuff. I would love to see what he would think about Quotient because it's cool. I just like how it's bringing in everything into one page. I mean, that's pretty awesome. And it's all the markets. So you're like aggregating information into one pagers. And if people are looking for some margins and just some simple, short, sweet wins, and it'll offset whatever losses if the AI is at least giving a little bit of an edge. The only game theory problem is that the AI is also being trained on propaganda. So I say that like it's getting its sources because of all the information is so diluted and curated and caressed and spun in a way that has well, we've seen that before in politics, especially in the United States, where it's like it looked like an overwhelming thing, and then the overwhelming thing didn't happen, you know. And then secondly, just the amount of people that are able to inside trade on key decisions in the halls of government, and then all of a sudden the oil markets are manipulated. Not, you
yeah,
know, just crap like that. Like, yes, we're going to bomb Iran. No, we're not going to bomb Iran. Oh, look, it's Friday, 5 p.m. I guess we're bombing Iran, like,
Yeah, and like they know that people are using sentiment algorithms
hmm
that are going to be like they're not thinking. They're just like, oh, Trump said good, good stocks, bad oil,
has,
and then trade a ton of money. Right? They're not like thinking.
have you found any bespoke instances where Q has actually won the under in a way that was unexpected? Have you been able to analyze moments where it was actually right about something that everybody else was wrong about?
Yeah. So we list these on our track record page,
Okay.
but like two that I'll call out are first this market about whether there would be a U.S. military operation against cartels in Latin America by like June 15th or something. And the way that the market was written, it was understood that it meant like an actual kinetic operation, which is kind of a silly market in general because like U.S. special operations are like embedded in Latin America and Asia and go on missions with these host nations all the time.
Mm-hmm.
Just not reported, but whatever. And anyway, Q didn't think this was going to happen, but this really popular trader on Polymarket, a KOL, did this campaign where they like were like, oh, the special forces detachment is doing training in this country. This counts. It's going to be us. And then the market went up to like 90%.
Oh
And
wow.
he was like, no, this is a misinterpretation of the rules.
Mm.
And he was ultimately right. And if you traded Q, you would have made like 450%. And then another example is like Strait of Hormuz, where Q was like consistently forecasting that it was not going to return to normal in May or June. And this was like an unpopular position at the time. And what Q understood, what some analysts didn't, was just like the mathematical difficulty of reopening the strait to the levels that it was on, like before the war, like how long it takes to clear mines.
Yeah.
That's one example, even if there was a deal. And Q also didn't think there was going to be a deal, and Q was right. So
Wow. That's
yeah,
cool.
I mean, it's interesting when you get to like commodities and stuff because it starts to integrate like a lot more data. Like it integrates like for oil, all of our conflict diplomacy market predictions. It's incorporating like price data. Like it starts to become a little bit more of a black box. So we're working on like how to deal with that. But yeah, it's interesting stuff.
How many users have started using the platform?
We have 180 weekly active users so far,
Cool. So
and
I'm
then
we're,
out of
I'm in the
the
under
yeah,
1,000 club.
oh yeah,
I just
definitely,
want to go on that record there. So if you're an EV
yeah.
Maverick, you are the earliest. You're the earliest. If you want to jump in on the Discord, you can head to dailydoots.com. If you have any questions, we have a Doots podcast chat channel sitting above our public stage. If you want to drop something in there, it'll populate on the screen. I did get a question from Ben Broad. He says, after the demo, can you ask Jordan about his experience launching with Banker and the firm? Can you expand on that?
Yeah, sure. Um, yeah, so I'm a forecaster person. Clanker is very popular there. They popularized this model of making money from the trading fees for the token versus selling the token. But Clanker and Forecaster have been on a bit of a decline in terms of usage and reach. And Banker is kind of a similar model, but they are just like a lot more active. They have a lot more reach on X. So we were able to work with them to kind of like plan the launch and the logistics around it. And they shipped like a couple new features to support us. So that was great. And then AutoBoy is this tool where essentially if there's a TG coming up, you can register a buy. So I could be like, I want to buy $100 to this token, as long as it's under a market cap of 250K. So when we launch the token, it's like coordinated with AutoBuy, and then they're able to kind of like trigger the buys for the users. And this had some pros and cons for the first iteration. Like the pros were that like people who are engaged community were able to like kind of sign up and not have to worry about like waiting by the computer with their finger by the mouse to trade. And a lot of them posted about it, so that helped us get awareness. The downside is that like if you weren't at part of this group and you didn't know what AutoPoy was, you were like, this launch was sniped. This isn't fair, etc. And like, I think that there's always going to be some people who are unhappy with the token launch because they buy the top, goes back down. They're like, oh, I lost all this money. And it's like, yeah, but it's also like you only lose money when you sell it.
That's right.
And like we just kept building, and you know the people seem to like it. Like the token has rebounded a lot over the last week. Our users are going up. Like people are paying to use the API. We're doing integrations with other companies. So yeah, we're just like kind of in it for the long game.
It's really cool, man. Yeah, very cool. I always love to see people getting out there and hustling and trying to build stuff that's useful for other people. And hats off to you. Let's go back a little bit to your origin stories. Where did you start? Like what were you doing before crypto, and then when did you like have the aha moment with crypto personally?
Um, with DAOs, I guess, because I was like, oh, this is really cool. Like, what if subject matter experts could get together and like run their DAO instead of working for other people?
Yeah, for sure. It is. It is pretty neat. It's like it's so innovative, but at the same time, it kind of like people kind of got they got a little bit tired of like how slow moving things can be sometimes, or trying to navigate some of the things. But it's like if you don't like the world the way it is, start doing something different. If you don't like the way DAOs are ran, then develop a different method of governance. I mean, we're just humans that are always trying to coordinate, try to figure out ways to keep things, fair and above board, because we see the current systems are certainly not working, right? Like you, it's there's parts of it that really work for some people, and for other people it doesn't work at all. And sometimes decision making is made by the people that are least qualified to do it. And so I like that idea of the delegation and stuff that DAOs can create. But then it gets analysis paralysis going on when you have too many options, right? And too many things to vote on. And then it's kind of like, oh, can we just let that person take care of these things because we all trust them? But then, no, we got to have 5 votes out of 6 or whatever. And it's like trying to track down the people to sign messages on wallets. And I don't know, but it needs to be heralded as one of the greater inventions of governance and like systems, building systems out there. I don't know. I think it's still so promising. So that's cool that your aha moment was DAOs and whatnot. And did you go to school at all for like computer science or marching band, or what did you do before that?
Middle Eastern studies
Middle
and
Eastern.
philosophy.
Oh, good. That's a long history. That's like all the history, kind of, in a way.
Yeah,
That's really
ours
neat.
kind of pales in comparison.
Yeah, no kidding. Yeah, I vis- I I laugh because like in Kansas, we definitely have one of the oldest houses in Kansas. The foundation is 1863. And,
Yeah, and like there, it's like let's run it back to like 510 or whatever, and
right.
this caliph and that caliph and this caliph,
Yeah.
and like this
There,
happened, and then this
yep.
empire and that empire, and then this empire B2. It's just
There's
like,
people in the Middle East that have doormats older than that. You know?
yeah, or like they're or the family house and everyone's like fighting over because like great uncle Muhammad passed away. It's
Right.
like 1,000 years old, right?
Yeah, won't do it on this podcast, but I'd love to pick your brain about current events over there. Just, I don't want people to start throwing shit in their computer monitors and leaving the show. So we'll avoid all that. Well, this is really cool, man. So like, there's even a search function I noticed on here, so you can type in keywords for different signals that are trending. It says here. So is there? So this is just like going to be pulling up the most prominent ones, or is it all of them in the background, but it's only letting you see the top 10?
Uh, yeah, like trending's probably the wrong word. It's just like normal search,
Okay.
so you can search across all of our stuff.
So if I just type in, let's just type in Trump. Okay. So there's like all the different, you hit view all results, and there's all these different things. So, well, it says 12 covered markets. Kalshi's on there, limitless, poly market. But I guess the point I was making is uh, it's a true aggregate of all of the different prediction markets that are out there. So you can really, it's kind of a one stop shop. And it'll be fun to see as time goes on and your numbers grow and just how many people start really adopting the platform. I'm gonna give it a whirl too, and I've never ever traded anything on Poly Market, but I'm going to at some point.
And you can also trade Kalshi.
Call
All the
sheet.
commodities markets are on Kalshi, which is easier in the US.
Okay, that's good to know. So Kalshi in the U.S. I guess I never even thought about the whole restrictions on different prediction markets, and I keep hearing murmurs of people like Kalshi's gonna get hammered at some point, but oh well. It'll be
Potentially.
potentially. We'll see. I mean, not that it's completely related, but it looks like the SEC and the CFTC in the United States, at least, are kind of moving forward with some more easy outlooks on crypto stuff. So I don't think
Yeah, yeah, they're looking to
directionally the right.
legalize hyperliquid or whatever.
Hmm.
So we'll see how much of that gets done before the next regime comes into power.
Yeah.
But
Yeah. Well,
I'm thinking about sending. Never mind. That's it. All political. But anyway,
that's all right. Is there anything else before I move on with the rest of the show? You're welcome to stick around, but I was just gonna ask you if there's anything on top of your mind you want to talk about.
uh, no, not really. I mean, great questions, and really appreciate the opportunity to kind of articulate the vision. And and yeah, sorry for being late.
No, you're
Just
fine.
like my internet was on the fritz.
That's okay. That's okay. Listen, this is I'd like to say it's a well-oiled machine, but there's a little bit of rust kicking around in this old man's head, so we're good, man. We're just glad that you're able to make it, and you're welcome to stick around if you want to stick around, or if you got stuff to do, that's fine too. But I really appreciate your time. This is Jordan from Quotient. If you want to check it out, you can start off at signal.quotient.social. You could also follow them on X. Um, I got to remember what your username is because I just followed you.
Quotient HQ.
Quotient HQ on X. So once again, thank you, Jordan, and we'll see you around.
Thank you. Appreciate it.
All right, good deal. Well, we'll move on with the rest of the show here. That was really cool, man. I can't wait to dive into that. I'm going to do that. Like, I can't wait to finish the call because I've never done anything on a prediction market before, and I got these Quotient tokens. I'm now a Quotient member, and I hope that the rest of you guys get a chance to spin the wheel of possibilities over there and give it a whirl, and support the people that are building apps for our ecosystem. I think it's fantastic. I'm excited. Okay, well, there you have that. I'm going to go back over to dailydoots.com. We'll finish out the show here. We got a few more weekly roundups here to get to. And yeah, cool. Also, thanks again for everybody that was asking questions during that segment. It was they were good questions about how things get launched in the land of Farcaster. Looked like good stuff. All right, let's see. User Greg Foley thinks that predictable issuance is more important. Okay, this was the one about the gold versus normal rate of return. User numerous ruin 4947 utterly destroys on the ETH issuance FUD Bitcoiners. Duder 58, here we go. Hammer time. I'm so tired of comments like this. This is exactly what Ethereum is up against. A lot of people still assume that because ETH has no fixed hard cap, its tokenomics are inherently uninvestable. They ignore the fact that ETH's current inflation rate is still relatively low and broadly compares to Bitcoin's. More importantly, they ignore that Bitcoin faces the same fundamental security budget problem. Ethereum is trying to balance several competing objectives at once: keeping issuance low, providing enough validator yield to secure the network, and supporting enormous transaction throughput, and keeping the fees extremely low. With fees now so cheap, getting back to consistently negative ETH issuance may be very difficult. But that does not somehow make Bitcoin's economics immune to the same trade-off. Bitcoin cannot indefinitely maintain a massive security budget while driving its block subsidy inflation toward essentially zero. As block rewards continue to halve, miner revenue increasingly has to come from transaction fees. If those fees do not increase dramatically, what pays for the hash rate required to secure the network? That is the part that people conveniently ignore. I'm going to read that again. Bitcoin cannot indefinitely maintain a massive security budget while driving its block subsidy inflation toward essentially zero. As block rewards continue to have, miner revenue increasingly has to come from transaction fees. If those fees do not increase dramatically, what is going to pay for the hash rate required to secure the network? That is the part that people conveniently ignore. Bitcoin wants near zero inflation, strong miner incentives, and reasonably low transaction fees at the same time. Ethereum wants low issuance, validator yield, massive transactions per second, and near free transactions. Both networks have to solve the same basic problem. Security has to be paid for somehow. Calling ETH endless tulips simply because it does not have an arbitrary 21 million hard cap completely misses the much more important question: which monetary and fee model can sustainably fund network security over the long term? Here's a warning, an alt warning, first time in 6 years. Looks like there's a couple of...
Have you ever bought Ethereum? Do you like Ethereum? Do you like altcoins? Because Ethereum has just done something for the first time in 6 years, and it could be a huge clue for what is going to happen next for altcoins, your favorite altcoin. I want to share with you this chart right here. And for
Okay, so this one, I'm not going to play this whole video. It's about 8 minutes long, but yeah, it's... He's got a link, and it's in the Doots notes here at dailydoots.com. Looks like my browser froze up. Isn't that convenient? Well. Okay, that's fun. Here it went. It's gone. Poof. Yeah, there you go. 128 gigs of RAM and a 5980 or whatever thing, and shit just still fails. That's great. Fantastic. Anyway, so that was a crypto YouTube channel. I'll get the name here in a second. Let me pull this up. at least want to pull up the name of the channel so you can watch.
Have you ever bought Ethereum?
Okay,
Do you like
this
Ethereum?
again. Okay, Crypto Crew University. Okay, so anyway, there you go. And then there's another YouTube channel here. Let's open this up real quick. At EMS. Okay, that might be a mistake there. All right. Ethereum has an unlimited minted supply. They have a high TVL and burning, but it's still a terrible design. Endless tulips. Okay, so it must be like a FUD thing against Ethereum, that channel. I'm just kind of in the camp that Logri the Bard illustrated last time we had a show. Was if we get back to building stuff and we get back to putting it on layer 1 and burning some, none of this would be a problem. And I think that is a one sentence summary. People got to start using layer 1 and get the most security, and you got a pretty good bang for the buck. Start burning ETH again. Make your burning ETH again awesome. Use a Rhythm of ETH documents Lido's schedule move to 0x02 validator credentials. It's up to 2,048 ETH per validator. In a few weeks, Lido will migrate or consolidate 80 to 90% of their staked ETH, currently under the permission set, which includes core client devs, among other Ethereum-related entities, to 0x02 credentials. Here's the napkin math. This is roughly 8.4 million ETH moving from 263,000 validators to 4,100 validators. The network will go from 900,000 to roughly 640,000 validators or so, a 30% decrease. This has massive benefits to the network load on Ethereum and brings us closer to SSF. Is that single state finality? Did I get that right? I think so. It also finally realizes the potential of 0x02 credentials and encourages the remaining big staking entities to follow through. The remaining 10% of staked ETH in Lido belongs to a smaller community of stakers of their permissionless models, which might or might not migrate depending on how much bond they can provide. A 32 ETH bond is needed for 2,048 ETH validators. An EIP has been proposed to allow for 0x02 validators to have configurable max EB, which makes it viable for on-chain LSTs to migrate all validators to 0x02 while remaining economically viable, considered for Hagota fork. This is especially important for permissionless modules, where mostly we would find home stakers with less than 32 ETH and bonded 0x01 validators that get swept. With configurable max EB, they could have, for example, 64 ETH validators being swept with a 2.5 ETH bond. This EIP is very likely relevant to allow Lido to continue moving the percent from the curated to the permissionless modules while remaining protocol aligned and so forth. Thank you very much, Rhythm of ETH. That's a double weekly doot for Rhythm of ETH. Great job this week. And another daily or weekly is a SM3GH34D making it as well for a second time. They speed the call for some more urgency over post-quantum. While the conversation focuses on the more accessible political and economic issue, Dano drops this banger to highlight what we actually should be prioritizing. There's a link to the X article. There we go. I'm currently between jobs, Dano Farron writes. One of my side projects in my prior job was running a website tracking the post-quantum migration of top chains. As part of my departure, I will no longer be contributing. I'm also joining one of the projects that was covered, which is its own ethical gray area. Could I have continued producing the rankings? I believe so. I have faith in my process and pipeline. But there will always be a credible claim that I may be adjusting the scale to benefit my new employer or to, quote, pump my bags or, quote, talk my book. This reduces the credibility of any position that I may take. And actually, neutrality isn't the byword. It's credible neutrality. Credibility is the currency in a report like that. As an aside, I will say credibility moving forward is going to be a major currency for people. Okay, so there's a long write-up here. Quote, If a critical portion of users needs 2 years to shift off of ECDSA and it needs to be done by 2029, the current point in the risk probability when it cannot be ignored, then the accounts need to be available by 2027. That's the end of this school year. Helpful framing concepts is Mosca's theorem and harvest now, decrypt later. Typical Dano style. He doesn't coddle the reader, but it's worth spending time to understand and is a great signal there was no LLM involved. By the way, the quantum readiness rankings are at the site quantumtracker.org. You can see all of the different top-level chains, and there we go. Tracking quantum exposure across Web3. Boy, there's a lot of data here. Wow. How many of them are tier F? Let's see. So there's quite a few tier A, Near Protocol, Algorand, Decred, Nervos Network. Ethereum is at the top of the B list. Ethereum, Binance Chain, XRP, Tron, Zcash. Let's see. I'm always curious. Who's the worst kids in class? Ton Chain, Litecoin. Wow. Polkadot, Pi Network, Qcoin. Wow, these are Filecoin this is interesting. Gnosis, Celestia, Monad. Okay, so there you go. There's quite a few people that are some old names in the space. As far as the tracker goes, F tier. I'm assuming that's like a grading scale. Okay, good. I just nuked the wrong thing. That's all right. Go to dailydoots.com. We'll get right back on to the weekly roundup. Getting close to the end here, folks. Benito 2030, there's a name. Benito 2030 is a duder number, let's see, 186. After my announcement, they share their thoughts on EIP 8363. Yeah, this is the issuance thing. Okay. As I already said, I believe the reasons for the EIP are valid, and after reading it, I still believe that's the case. The calculations made last time in roughly 2024 were convincing me that basically uncapped issuance would lead to tax disadvantage for solo stakers, which would lead to at least some solo stakers dropping off. At the same time, lower APYs would likely do the same. Beneficiaries would be LSTs that would then be, quote, too big to fail, or generally speaking, centralization forces would be hard to manage. I am not so sure about the whole derivatives discussion, since layer 2 ETH is basically a derivative as well. But that's never been a blocker for L2s. My biggest issue with the EIP is the timing. I think this is basically one of the last EIPs we should push. And we should push it when Ethereum we should push it, quote, when Ethereum has won. Why? Well, let's just assume, hold on one second. I got to fix my chair. I got a big old camera back here and it's hit my chair. I'm not so sure my biggest issue with the EIP is the timing. Let's just assume that the productive asset meme, that's air quotes, productive asset meme, and APY plays a role for TradFi. What if they don't care about nominal and real yield because they just want to sell a yielding asset? And what if ETH's competition doesn't care about being right, but cares about catering to the TradFi audience? Maybe a 5 to 7% APY on Solana sounds better than a 0% ETH, despite not being Lindy, despite being more centralized, despite being diluted to non-holders. Also, the quote, DeFi is going to explode argument makes sense to me, and it doesn't seem to be addressed in the EIP. That's already the second issue people brought up with regards to changing the issuance, which makes me believe that the EIP is a niche solution for a very specific problem that likely didn't take into consideration some stakeholders of the ecosystem, and that could lead to unwanted consequences that could seriously harm Ethereum. It feels like L2's 2.0. The right idea, the wrong timing. Hence, not a good solution for the current circumstances. I still believe we can't scale L1s endlessly, and we'll need L2s for some use cases. But we focused too much on L2s when scaling the L1 would have been a better solution, or at least shouldn't have been completely abandoned for some years. And we potentially lost a whole cycle because of the L2s eating mainnet's lunch argument. We lost because we developed a solution that might have worked if there was just one ecosystem. But ETH had competition and new L1s popped up on top of that. This feels similar. If there was no other L1 and no other APY and no competition, this might be the right choice. But if we did this right now, we would indeed push people into other ecosystems where they do get some reward for air quote for free, risk-free yield. I don't know about you, but that's not what I want. We can do that when there's basically only ETH left and the whole financial world is already onboarded and living in the ETH ecosystem. But that's not the case yet. And changing the issuance might even open the door for a competition that is basically dead now. Path dependency is a biatch, and we should learn from the past. The same change can make sense and not make sense, depending on timing and circumstances. Yeah, well said. I think that's the line that stands out to me. I'll read it again. The same change can make sense and not make sense depending on the timing and circumstances. And finally, I understand that centralization is a multidimensional problem and likely also has a deadline, but I do not think it is as close as people or the authors think. Lido was the number one enemy some years ago and is still a threat to centralization. But ETFs, restaking, and obviously centralized exchanges are constantly changing the environment and playing field. Yeah, well said, man. Always bringing bangers, Benito 2030. User none-etherless 325 foreshadows the future of a lean Ethereum. None-etherless is a deuter number 16 for this week. And the final lean Ethereum roadmap final block time is 4 seconds. A third of now, which is 12 seconds. ZK Gigabrain at the wheel. Huge engineering achievement by the Zisk team. Proving blocks in real time with just 4 GPUs while maintaining 128-bit security and post-quantum resistance is an outstanding milestone. Incredibly proud of what this team is building. That's Jay Bylina's X handle. Quote, Ethereum proven real time on 4 5090 GPUs with a P99 of 9.62 seconds, all providing 128-bit provable security powered by Poseidon 1 and post-quantum secure. There you go. Fantastic. I want to see if there's some comments on here. I'm going to take out this canceled thing because I want to see if there's subsequent comments. Jay Bylina's post got 330 likes and 51 re-likes. Book of Ethereum chimed in, just leveled up. Advere Labs, amazing achievement. Congrats. Looks good. Yeah, there's some people chiming in here. I'm looking for some names. Oh, Antonio Gomes. There we go. Proving a block with hash-based Starks in real time on 4 GPUs is a hard systems win, but that's not a small thing to pull off. It's worth separating the two claims, though. The proof system resisting Shore is one layer, but the transactions inside those blocks are still signed with ECDSA, and over 65% of ETH sits in addresses that have already exposed their public key. A fast quantum-resistant prover wrapped around a quantum vulnerable signature scheme still leaves the keys as the weak point. I'm curious whether Zisk roadmap touches signature verification at all or stays scoped to proving execution. Okay, there we go. And finally, fellow moderator, user Edmund Edgar. Edmund Edgar is a deuter number 53. Shares a counter argument against negative real yield claims by EIP 8363 proponents, and Tricky Troll delivers a transcription for the lazy. Okay. Tricky Troll says, I'm a lazy man, but not too lazy to post it here for other lazy folks. So here it goes. Thanks for sharing this, by the way. It's a great post. Hats off to Edmund Edgar. From the article, the authors of the EIP claim that the current issuance curve forces solo stakers out. Okay, solo stakers are forced out. Dilution erodes. Everyone's real return as the ratio climbs. But solo stakers, who in most jurisdictions pay income tax on their normal yield, cross into negative dilution adjusted returns well before large operators and holders of tax shielded positions do. This includes accumulating exchange traded products, ETPs, and non-rebasing or wrapped liquid staking tokens. Pintail expands on the logic behind this here. The problem is that you're paying more yield actually does nothing for you at high staking ratios. You get taxed on your nominal yield, even though your ETH holding is actually shrinking as proportion of the ETH supply. Some concrete figures, I'll use a 40% tax rate that I pay as a UK-based solo staker. Once the staking ratio reached 60%, you earn 1.9% nominal yield against a dilution of 1.2%. But 40% income tax applies to nominal yield, so you only get to keep 1.2% of it, which is exactly canceled by dilution. Above 60% staked, you're in the negative yield before even thinking about trying to offset other costs. Why would you be a solo staker in those circumstances? In the motivation section of EIP 8363 in the issuance discussion, more generally, the real return or the real yield is often used to mean nominal staking yield minus ETH supply grown. A much better term for this that's sometimes used as well is dilution adjusted yield. In economics, real yield has a standard meaning. It's a nominal rate adjusted for price inflation of a basket of goods, not for the supply growth of the asset. Let me do this. Let me read that sentence again. In economics, real yield has a standard meaning. It's the nominal rate adjusted for the price inflation of a basket of goods, not for the supply growth. It's the nominal rate adjusted for price inflation. Okay. Dilution adjusted yield is a supply share metric that answers, how does my fraction of all ETH change? Real yield is a purchasing power metric that answers, how does my ability to buy goods and services change? Conflating these two leads to statements like solo stakers have negative real yield, when what's actually is shown is solo stakers' share of ETH supply shrinks. A falling share of total ETH does not automatically mean that the value of their position measured by what can be bought in goods and services is falling too. What matters for the long-run viability of solo stakers is real return in their consumption currency after tax and costs, not just their percentage of the ETH supply. A world with negative dilution adjusted yield can still have positive real returns. Conversely, a world with positive dilution adjusted yield could still have negative real returns. To make the EIP's claim that, quote, solo stakers are forced out rigorous, you would need to model not only after tax staking income and cost structure of solo staking, but also ETH's expected price dynamics relative to fiat, as well as fiat inflation, to then show that solo stakers' real returns fall below what is needed to cover costs and justify risk. Showing that dilution adjusted yield goes negative alone does not establish that conclusion. To see how reductionist a pure dilution adjusted yield argument can be, consider a holder of unstaked ETH in the snail issuance world. For staking ratios above 0% and below 50%, annual issuance is positive. So a holder of unstaked ETH has a negative dilution adjusted yield up to roughly 0.5% if you treat dilution adjusted yield as sufficient to make a position untenable. If you're saying that it is rational to hold unstaked ETH whenever the staking ratio is above 0 and below 50%, well, taking seriously, that logic pushes you towards an equilibrium in which either no stake is or no ETH is staked and there is no issuance, or more than 50% of ETH is staked and there is no issuance. To be clear, my position is that dilution adjusted yield is less than or equal to 0 is not a relative threshold for a viability of a position. And I reject both that solo stakers are forced out under the current issuance curve, as well as that snail issuance automatically leads to 0 issuance. Based on a dilution-adjusted yield argument alone, I would ask the authors to either, bullet A, retract their claim that solo stakers are forced out under the current issuance curve, or, bullet B, provide an argument for it that doesn't rely solely on dilution-adjusted yield, or, bullet C, clearly communicate in the EIP that under their worldview, snail issuance will lead to 0 issuance as an expected outcome. I'm struggling to figure out my position on this, but what the most important thing always is decentralization and chain security, right? That's the most important thing. Anything else is a compromise or a trade-off on centralizing the chain if we don't do this right. And I hope that we get the right thing done. That's all I got to say about that. All right. Well, that's it for this week. Episode 156 in the books. Great job today, Jordan and his team of 3 that have a really cool product at Quotient. Make sure you guys give yourself a chance to go check that out. I think it was signal.quotient.social is the website. I'm going to log off of here. I'm going to get this thing published, and I'm going to go on Polymarket, and I'm going to do a couple of things with this Quotient suggestion and just play around in the sandbox a little bit. Maybe burn some tokens in the process, or at least US dollars. Anyway, in for a good night tonight. Going to go watch Tim McGraw. I know, I'm a boomer. I'm not even a huge country fan, but when the wife is a big Tim McGraw fan, the husband will follow. And that's all I'm going to say about that. All right. Well, on behalf of the EV Mavericks DAO, the daily general discussion at our Ethereum, my name is JT. Cheers and big hugs.